All right, let's break down one of the biggest shifts happening in the markets right now. It's a story that's playing out just under the surface, and frankly, most people are missing it entirely.
You know, these huge market moves, they rarely announce themselves with a big bang. They start with these quiet signals, little clues buried deep in the data. And that's exactly what happened here. While everyone else was waiting for the news alerts, the real story was already being told by the numbers. And this whole thing, this demand earthquake, you can trace it all back to one incredible figure that came out of China. And there it is, 836 tons. In March of 2026, China imported 836 tons of silver in a single month. I mean, it's a number so massive, analysts had to check their data twice just to make sure it was real. Now, to really put that in perspective, look at this. The 10-year average for March imports, a mere 36 tons. So we're not talking about a small uptick. This was a 23-fold surge over the norm. It was an absolute explosion. So the big question is, why? What caused this? Well, it was really a perfect storm. Two powerful forces collided at the exact same time. First, you had a retail rush. Everyday people piling into silver as a way to protect their wealth. And second, you had this massive industrial surge, led by solar panel manufacturers who, by the way, are concentrated in China and consume about a fifth of the entire world's silver supply each year.
And all of this incredible demand, well, it ripped the cover off a deep, fundamental problem at the very heart of the global silver market.
This right here tells the whole story. In the West, you have the paper markets like COMEX quoting silver at around $80 an ounce. But then you look to the East, to the Shanghai Gold Exchange, where they trade actual physical metal, and the price was $91. Think about that for a second. Two completely different prices for the exact same asset.
That's a 14% premium. Buyers in the East were willing to pay 14% more just to get their hands on the real physical stuff. That's not a minor detail. That's the market screaming.
This price gap is what we call an arbitrage opportunity. And when it gets this wide, it's a massive red flag. It is the market's way of telling you that the price on a piece of paper is totally disconnected from physical reality. The silver squeeze people have been talking about, it isn't coming. It's already here.
Here's the easiest way to think about it. A paper futures contract is like a claim ticket for a coat. Physical silver is the actual coat. So in the West, they're busy trading billions of dollars in these paper claim tickets. But in the East, they're actually buying the coats. And the supply of coats is running out. Now let's look at the other clues, because this isn't just some random market blip. This is a structural shift, and even governments are starting to make their moves. What we're seeing is the classic anatomy of a market squeeze playing out right in front of us. First, the U.S. government officially designated silver a critical mineral, meaning it's essential for national security, and they started a strategic stockpile. Second, global mine supply is just flat. It cannot keep up with this demand. And third, those physical premiums just keep getting wider, confirming what we already know. There is a real-world shortage.
Okay, let's pull the lens back. Because to really understand where we might be going with this, we've got to look at where we've been over the last 50 years. When you look at a 50-year chart of silver, a very clear pattern emerges. Every single major silver bull market in modern history has lasted about 8 years. Not 18 months, 8 years. So if that historical pattern holds true, this current bull market isn't ending. It might only be at the halfway point.
So what does that mean for the price? Well, the price targets that come out of this long-term analysis, they're not small. Analysts are pointing to a potential silver price somewhere in the $200 to $300 an ounce range. And that's not a wild guess. It's a credible, data-supported target. Now let's look at the biggest picture of all, because what's happening in silver is just one part of a much larger global story. A historic rotation of wealth out of paper into physical, and from the West to the East. This is the Buffett indicator. It basically compares the total value of the stock market to the size of the whole economy. In April 2026, it hit 227%, the highest valuation in recorded history. That's higher than the dot-com bubble, and it's higher than right before the 2008 crash. And look, markets at these levels don't stay there forever. They correct. And when that correction happens, trillions of dollars in capital won't just disappear. It moves. It seeks safety in real, tangible assets. And you can see that trend happening right here. In that same month, March 2026, U.S. gold ETFs saw a record $13 billion flow out as Western investors sold their paper claims. During that exact same time, China's gold ETFs saw inflows. The West was selling paper while the East was buying the physical asset.
And this is the bottom line. Asia is already buying the majority of the world's physical gold and silver. And in any market, the mechanism that determines the real price discovery, always follows physical volume. The center of gravity for precious metals has already shifted east.
So, we've looked at the demand shock, the paper versus physical disconnect, the moves by governments, the historical patterns, and the global wealth shift. When you put it all together, what's the story the data is telling us?
The takeaway is this. Every single pillar that supports a fundamental structural repricing of silver is in place right now. You've got record demand, stagnant supply, government stockpiling it, and a financial system where paper promises are losing their credibility.
And this is how the market really works. Smart money doesn't wait for the headlines. It reads the data. It watches where the physical metal is flowing. And it makes its move, quietly and deliberately, well before the rest of the world even knows a game is being played.
Ultimately, this isn't just a story about silver. It's a story about a fundamental shift in how the world values things, a move away from paper promises and toward real, tangible assets. All the signals are there. The only question is, who's listening?